Ever wondered how to identify profitable trading opportunities? One of the secrets lies in understanding the hammer candlestick pattern. Welcome to the captivating realm of stock trading, where patterns and trends hold the key to potential financial success. Today, we're focusing on the hammer candlestick pattern. This handy tool is a favorite among traders for its reliability in predicting market reversals. It's a bullish reversal pattern that typically appears at the end of a downtrend, signaling that the bulls are ready to take the reins. Let's delve deeper into the anatomy of the hammer candlestick pattern. Picture a candlestick. The body is small, signifying little difference between the opening and closing prices. Then there's an extended lower shadow, hinting at a significant intraday sell-off. However, the bulls managed to claw back, closing near the day's open. The result? A candlestick that resembles a hammer. An important point to note here is that the hammer's upper shadow, if it exists at all, is relatively small. This is more than just a pattern. It's a story of a trading day, a tale of a dramatic fight between bulls and bears, where bulls emerge victorious, turning the tide of the market. This pattern is a beacon of hope for traders, a sign that the downtrend is losing steam and a potential bullish reversal is on the horizon. The hammer candlestick pattern is an invaluable tool in your trading arsenal. It can help you spot a shift in market sentiment, giving you the upper hand in your trading decisions. It's like having a secret weapon that can help you navigate the turbulent seas of the stock market. Remember though, that while this pattern can be a reliable indicator, it's not foolproof. An astute trader always combines it with other technical analysis tools to make informed decisions. Getting familiar with this pattern could be your first step towards successful trading. So, buckle up as we journey further into the world of the hammer candlestick pattern and unlock the secrets of successful trading. Now that we know what a hammer candlestick pattern is, let's delve deeper into its characteristics. The hammer candlestick pattern is distinguished by three main features. First, let's talk about the color of the body. The body of the hammer candlestick can be either red or green. A green body indicates that the closing price was higher than the opening price, suggesting a stronger bullish reversal signal. On the other hand, a red body signifies that the closing price was lower than the opening price. While this may seem bearish, it is still a bullish signal as the market managed to push the price up significantly from the low point of the day. Next, we turn our attention to the upper shadow. In a perfect hammer candlestick pattern, the upper shadow is very small or non-existent. This is because the high price and the closing price of the day are nearly the same. If an upper shadow is present, it should not be more than a fraction of the body length. The absence of a long upper shadow further emphasizes the market's bullish sentiment. Finally, the unmistakable feature of the hammer candlestick pattern is the size of the lower shadow. The lower shadow should be at least twice the length of the body. This long lower shadow is created when the market pushes the price down after the open, but then a surge of buyers steps in and drives the price back up, closing near the high of the day. This creates a visual hammer-like shape, hence the name. It's also important to note that the hammer candlestick pattern typically occurs after a downtrend, indicating a potential reversal in the market direction. The longer the downtrend preceding the hammer candlestick pattern, the stronger the potential for a bullish reversal. These distinct features set the hammer candlestick pattern apart, making it a reliable indicator for traders. As you continue your journey in stock trading, recognizing and understanding these features are crucial steps in effectively using this powerful pattern to your advantage. Understanding the characteristics of the hammer candlestick pattern is crucial, but it's the pattern's significance that really matters to traders. We're now at the heart of why this pattern is such a game changer in the trading world. The hammer candlestick pattern, with its unique shape and structure, is essentially a beacon, a signal that the tide may be about to turn. It's a bullish signal, indicating that a price reversal could be on the horizon. This tiny pattern, like a lighthouse in a storm, could be signaling the end of a downtrend. Picture this. A stock has been in a downward spiral, the bears are in control, but then a hammer candlestick pattern appears. This pattern is like a ray of hope for those looking for a reversal. But why? The answer lies in the long lower shadow of the hammer. The long lower shadow tells us a story of a trading session where sellers took control, driving prices down. But this isn't a tale of their victory. Instead, it's a tale of a comeback, a fight back by the buyers. Despite the sellers' best efforts, the buyers managed to push the price back up, closing near the opening price. This struggle, reflected in the long lower shadow, is a testament to the buying pressure building up. The hammer candlestick pattern shows us that the buyers are starting to flex their muscles. The bears may have started the session in control, but the bulls are fighting back. It's like a tug of war, and the hammer candlestick pattern suggests that the bulls might be gaining the upper hand. But remember, while the hammer candlestick pattern can be a powerful indicator, it's not a crystal ball. It signals a possibility, a potential change in the wind. As traders, it's our job to interpret these signals, using them alongside other indicators and our own analysis to make informed decisions. In other words, the hammer candlestick pattern can be a sign that the bulls are about to take control. So next time you spot this pattern, remember its significance. It's not just a pattern, it's a story of a struggle, a potential turning point, and perhaps the dawn of a bullish market. Like many patterns in stock trading, the hammer candlestick pattern comes with its own set of variations. These variations are not just mere modifications, but they can provide additional trading signals, adding more layers to your trading strategies. The first variation we'll delve into is the hanging man. A rather intriguing name, isn't it? The hanging man pattern is essentially the same as the hammer pattern in terms of its physical appearance. It's a candlestick with a small body and a long lower shadow, but there's a twist. The hanging man appears at the end of an uptrend, not a downtrend like the hammer. This pattern signals a potential bearish reversal, indicating that the bulls are losing control to the bears. It's like a warning bell, telling you to be cautious of a possible price drop. The next variation is the inverted hammer. As the name suggests, this pattern is an upside-down version of the hammer. It has a small body at the lower end of the trading range and a long upper shadow. This pattern appears at the end of a downtrend, just like the hammer, but it signals a potential bullish reversal. The long upper shadow shows that the bulls are attempting to regain control, pushing the price up, but the bears manage to pull it back down. It's a sign that the tide may be about to turn in favor of the bulls. However, remember that these patterns are just signals, not guarantees. They indicate potential reversals, but the price movement can always go the other way. That's why it's crucial to use these patterns in conjunction with other indicators to validate your trading decisions. In the world of stock trading, knowledge is power. The more patterns and variations you can recognize, the more equipped you are to navigate the market. The hammer, the hanging man, the inverted hammer. Each of these candlestick patterns is a tool in your trading toolbox. Recognizing these variations can give traders an edge in predicting future price movements. So keep learning, keep practicing, and keep trading. The stock market is a vast and exciting place, full of opportunities waiting for you to seize. Now that we've explored the ins and outs of the hammer candlestick pattern, it's time to put this knowledge to practice. Let's imagine you're monitoring a stock and you notice a downtrend. Suddenly, a hammer candlestick pattern appears. This is your first clue that the trend might be about to reverse, signaling a potential buying opportunity. But hold your horses. A single hammer candlestick isn't enough to make a confident decision. You need to consider other factors as well, such as trading volume and market trends. For instance, if the hammer candlestick forms with high volume, it suggests that the market sentiment is shifting from bearish to bullish, making it a stronger reversal signal. On the other hand, if the hammer candlestick forms with low volume, the reversal signal might not be as reliable. It's like hearing a whisper in a noisy room. You can't be sure if you've heard it right. Market trends are another crucial factor to consider. If the overall market trend is bullish, a hammer candlestick might be a strong sign to buy. But if the market trend is bearish, the hammer might just be a temporary pause in the downtrend. It's always wise to consider the bigger picture when making trading decisions. Another tip is to wait for confirmation. For instance, if the next candlestick after the hammer is bullish and closes above the hammer's high, it can confirm the reversal signal. The key is patience and careful observation. Remember, the hammer candlestick pattern is a tool, not a guarantee. It's meant to increase your odds of success, not to predict the future with 100% certainty. Always manage your risks wisely and don't invest more than you can afford to lose. By understanding and utilizing the hammer candlestick pattern, you can enhance your trading strategy and increase your chances of success. We've covered a lot of ground today, so let's quickly recap. We've explored the hammer candlestick pattern, a fundamental bullish reversal indicator. We've delved into its unique characteristics, significance, and key variations. We also discussed how to effectively use this pattern in your trading strategies to maximize profits and minimize risks. Remember, successful trading isn't just about knowledge, it's also about practice. So keep studying, keep trading, and the results will follow. Until next time, happy trading!